Our next speaker is Mr. Nick O'Donohoe, the Chief Executive Officer of the Commonwealth Development Corporation. He has a long history in the impact movement and can share a lot of insights with us. Please welcome Mr. O'Donohoe.
Firstly, can I extend a big thank you to the organisers for giving me this opportunity to speak to you all today at the 8th Annual Sandkalp Forum. I have the privilege of being the Chief Executive of CDC, and I'm sure many of you are aware of our work. But in a nutshell, we are the world's oldest impact investor, and we were the world's first development finance institution. Today, we currently have over 1,200 investments in Africa and South Asia, and a portfolio valued at over $5 billion. And last month, I was delighted to confirm that CDC would again be investing a further $1 billion in Africa in 2021. And that money will be invested directly in companies or via private equity firms and venture capital funds. We believe we're the largest private equity fund investor on the continent. And in addition to that, we provide a range of other products such as debt and trade finance. Most importantly, though, we have a mandate to bring about positive economic, social and environmental change through all our investments, as well as to make a modest return for the UK taxpayer. And as I said, we're the world's first DFI. We were founded 73 years ago. When asked about the purpose of CDC, our first chairman, Lord Reith, who was also the founder of the BBC, said it was to do good without losing money. And that's really always been our purpose and our mission. And as I said, that's what makes us the oldest impact investor in the world. And of course, there's no magic bullet to being a successful development finance institution or impact investor, particularly in Africa. First of all, you have to invest in sustainable and well-managed businesses. And that means having the same rigorous financial modeling and analysis as any mainstream investor. And we may be somewhat more flexible in accepting a lower risk-adjusted return, but we can't be flexible on basic financial disciplines and due diligence. And secondly, you have to invest in a responsible way. Over the last 20 years, I'm proud to say that development finance institutions have really led the way in improving environmental, social, and governance standards. And we continue to do that today. And that commitment to strong environmental standards, good governance, health and safety for employees, living wage rates, respect for human rights is non-negotiable in what we do. And thirdly, you need to do better than just doing no harm. You need to seek positive impact. And that means you need to ask, what difference am I making to people's lives? Who benefits from each investment we make? How do they benefit? And by how much? What would happen if we didn't make the investment? Would someone else make it? Would it happen anyway? How can we influence and create more developmental value by being owners or lenders to these businesses? So we ask those questions of ourselves when we invest directly, and we set the same standards and ask the same questions when we make fund investments. And finally, we always ask who our partners are. And most importantly, do they share our values? We recognize that we need local support in everything we do, whether that's through a local fund manager, a co-investor, a sponsor, a management team, or a team of employees. And we know our best investments have come when there's alignment in both our financial and our development goals. And we were aligned, for example, with Liquid Telecom when we agreed to invest $200 million in that company 2 years ago. And we believed, and the company believed, that high-speed internet access was critical to the continent's development. And we shared Stride Mutawaya's vision of building a fiber network from Cairo to the Cape and Dhaka to Mombasa. And we were also prepared to bet that the company's management could execute such an ambitious strategy and do it profitably. We were also aligned with Lafarge when we agreed to form a joint venture called 14 Trees in Malawi about 4 years ago to develop initially low-carbon bricks and more recently to use 3D printing to bring technology that will make building homes and schools faster, cheaper, and 30% more efficient. We're also aligned with a much smaller company called M Pharma based in Ghana, who are using modern technology to increase access to pharmaceuticals through community pharmacies across Africa. Today that business serves approximately 1 million patients through a network of over 400 pharmacies across 5 African countries. And indeed, during the coronavirus pandemic, mPharma has been able to partner with local medical laboratories in some of these countries, convert them to testing centres, and rapidly increase the number of tests available. So far, over 1 million testing kits have been procured and distributed. And those are just 3 examples, but they're the type of things that make us proud to be a development investor. And what they share, leaders who have a vision for change, an ambition to improve lives, and the belief and the financial discipline to be able to do it by building strong, sustainable, and profitable businesses. And when we look at Africa today, we see a continent of enormous human and natural resources. And we see a young, vibrant, and entrepreneurial workforce which doesn't want aid, but wants opportunity. We see a continent that, despite its many challenges, has the ability to deliver decades of growth that create jobs and improve the lives of hundreds of millions of people, and also attracts hundreds of billions of dollars of new investment. Where do we see those opportunities? We see them in clean energy and helping countries develop economies that are adaptable and more resilient to climate change. And that's a key focus for us, and we're targeting 30% of our total investment this year to be in climate finance. There are still 600 million people on the continent without access to reliable power, and making that available in a way that allows for a transition to a carbon neutral economy is a critical objective of CDC. The development of digital infrastructure is also going to be critical to the African continent over the next decade. And as I mentioned in the liquid example, a simple thing like affordable internet connectivity allows for a whole ecosystem of businesses to spring up, as well as providing critical services like banking to underserved communities. And DFIs like CDC can do 2 things in helping to achieve that. Firstly, we can provide the hundreds of millions of dollars necessary to build the critical infrastructure. But secondly, we can also provide growth capital to fund young entrepreneurs who want to take advantage of that connectivity to build the businesses and create the jobs of the future. So there are lots of fantastic opportunities out there for impact investors. But to be a successful impact investor, you need to be patient, you need to be willing to be counter-cyclical, you need to look through the short-term problems and focus on the long-term opportunities. And being an impact investor is hard. Our job is not to crowd into businesses where the returns may seem very attractive, but the impact on people's lives is negative or non-existent. Nor frankly is it our job to pursue opportunities that may create enormous benefits, but where businesses are unsustainable. And that is what makes our dual mandate so difficult, but at the same time so worthwhile. And that's what CDC was set up to do. It's what we've done successfully for the last 73 years, and what we will continue to do in the decades to come. And I know you're all here at Sandkalp because you want to make a difference. And I wish you all a very interesting and stimulating conference, and all success in building those impact businesses which can help Africa grow, take advantage of its enormous opportunities, and change its people's lives for the better.